Hello and welcome to Dollars and Cents, the Australia Institute podcast where we're talking about just what the hell is going on in the economy. I'm Eleanor Johnston-Leake, the senior content producer here at the Australia Institute, and unfortunately our chief economist Greg Jericho is away again this week. He's been quite sick, so we have our senior economist Matt Grudnoff filling in his stead. Thank you so much for joining us, Matt.
G'day, Eleanor. Thanks for having me.
I feel a bit bad because this is actually a bit of a big missed opportunity for Greg to do what he loves the most, which is to rag on the RBA. So, Matt, you're going to have to do it in his place.
Yeah, well, they definitely deserve it, particularly after yesterday's decision.
That is still the case, but this interest
on hold,
rate...
Chris, on
Oh,
hold.
that is a big surprise.
On hold.
Okay.
So today the board decided to leave the cash rate on hold at 3.85%.
Most observers had anticipated a cut to the cash rate today. Reserve Bank Governor Michelle Bullock said the decision to keep the rate on hold was about timing, not direction.
Home buyers and mortgage holders have been banking on this cut. They've been factoring it into their budgets. Have they been betrayed today?
No, I don't think we're betraying anyone because, as I went back to earlier, I think betrayal would be to let inflation get out of hand. We want to make sure we've nailed it.
Yeah, well, in a move that most people didn't really see coming, the RBA left interest rates on hold at 3.85% this week. Market predictions from the day before put it at a 97% chance of a 0.25 percentage point cut. So I don't feel bad that it wasn't just me who didn't see this coming. Matt, why did this come as such a surprise? Why was almost everyone predicting that there would be a cut?
Yeah, it's not normally that you get such a universal one way or the other, but we definitely got it. And the reason is because, look, inflation is well within the RBA target band. So that's 2 to 3%. Inflation's currently at 2.4%, has been for the last 6 months, been within 2 to 3% for the last 9 months. It's, if anything, going down, not up. And so therefore, inflation does not seem to be a problem. At the same time, the economy is barely growing. The most recent quarter of economic growth we had was 0.2%. Now, you can't go much lower than 0.2% without going negative.
Yep.
Right? So it's barely growing at all. And we know that interest rates at the current rate are what economists call restrictive, which means they're slowing the economy down. They're designed to contract or slow the economy. And so they really need to cut it by almost a full percent. It's got to be basically in the high twos before it's not restrictive. And so everybody thought, well, in the current circumstances, why wouldn't the RBA cut? They need to cut or it's going to cause economic damage and hurt people into the longer term, but they didn't.
Not really the situation where you want a restrictive interest rate level at all, no.
No, not at all.
So, Matt, what was the reason that the RBA gave behind their decision?
Yeah, they basically said they needed more information. And to be honest with you, Eleanor, I have no idea how much more information they need.
Yeah.
So what they're really waiting for is at the end of this month, the end of July, we'll get another quarterly CPI, inflation readout from the Australian Bureau of Statistics. And look, I don't like predicting the future on, economic stats, but almost certainly it is either going to show inflation right in the middle of the band, or it's actually more likely people are predicting that it'll be in the low twos. So we might actually see a small drop in inflation. Certainly what we are not going to see is a big bounce in inflation.
Yeah. Well, I mean, I wouldn't, be too sure about predicting anything just after.
Yeah, well, all the market predicted a cut and we didn't see an interest rate cut. But, I mean, they were predicting a cut because that was the sensible thing to do. That was what all the economic data was telling them they should do. Why they didn't, I have no idea. Well, I mean, I have some ideas. So basically what the RBA are ultimately concerned about is they think that unemployment is too low. And the RBA have a flawed understanding of what too low unemployment is. So what they're concerned about is they think if unemployment's too low, businesses will have a lot of trouble hiring workers. Those workers will have a lot of bargaining power and they'll be able to bid up wages.
Oh, no.
Yep.
Yeah, how terrible.
And these higher wages will then lead to higher prices. The problem is unemployment's just above 4% and wages have not exploded. unemployment was 3.5%, kind of fairly recently,
Yep.
and inflation's and wages didn't explode. So there is no explosion in wages at the current level of unemployment. But basically the RBA have this outdated model of how it all works, and they're absolutely convinced, despite years and years of data that says they're wrong, that they're right, and that inflation is about to go crazy.
Yeah. So when's the next meeting that they'll be deciding on interest rates again?
In the middle of August, so in about 5 weeks. And look, my guess is that the inflation data will come in. It'll probably show, as I said, that inflation is well and truly under control. The RBA will look stupid, and then they'll cut rates in August. In fact, they might even have to cut by more than 0.25%. As I said, they really need to cut about a full percentage off to get us out of restrictive territory.
Yeah.
And they've got to do it pretty soon, or we're going to suddenly find that the economy is going backwards.
Well, hopefully there's no more, data points that the RBA thinks they have to wait on before then.
Yeah. I mean, look, it was a really odd decision. And I think they completely and totally got it wrong.
Well, I hope that was enough ragging on the RBA for Greg, who will listen to this later. I hope we did you proud, Greg. And also because Greg is not here and therefore we can do whatever we want, I would like to bring Tariff Corner up and have a talk about it right now.
Speaking of crazy stuff.
Yeah, I know. We're going wild.
In a blow for Australian industries, Donald Trump announced he'll impose high tariffs on copper and pharmaceuticals.
We're going to give people about a year and a half to come in, and after that they're going to be tariffed if they have to bring the pharmaceuticals into the country, the drugs and other things into the country. They're going to be tariffed at a very, very high rate, like 200%.
They're obviously very concerning developments. We are talking about billions of dollars of exports to the US when it comes to pharmaceuticals.
The big issue for pharmaceutical makers in Australia is still the issue of the PBS.
Our assurance to the Australian people is that PBS is not for negotiation, it's not for sale.
There actually are some tariff updates, unfortunately. Trump has flagged a possible 200% tariff on pharmaceuticals.
Yeah.
Now, that seems very specific and intense. Matt, do we actually export any pharmaceuticals to the US?
Yeah, we do. It's actually quite a big one compared to the other kind of stuff we export to the US.
That's not good.
To be clear, it's still not huge because we don't actually export a great deal to the US, but it's the third largest after meat, which is mainly beef, and gold. We export about $2.5 billion a year of pharmaceuticals to the US. Look, pharmaceuticals is much more than steel and aluminium and some of the other things that the US has put tariffs on. But again, because the US is not a huge trade partner, it will have some impact, but it's not going to be massive. And also, I mean, a 200% tariff is one of those crazy numbers that Trump throws around, where what you're effectively saying is we're banning trade between two nations. My guess is, this is a bit of a thought bubble. They may well, in fact, almost certainly they're looking at tariffs on pharmaceuticals. Whether or not it'll be 200% is another question.
Yeah, I mean, what was it that reporter asked him about what he was called? Was it Trump always chickens out?
Yeah, taco trade. Yep,
we'll see if that applies to this one. There's been some reporting over the recent weeks that the US pharmaceutical industry is, let's say, unhappy about Australia's pharmaceutical benefit scheme. Can you just unpack what's going on there?
Yeah, so the reason they might be imposing these tariffs is basically because they want to put pressure on Australia and other countries to try and effectively get rid of the pharmaceutical benefit scheme, the PBS. Now, the PBS is the scheme where Australians can get access to affordable medication. So when you go and you have a script and you give it to the pharmacist and they charge you, and for non-concessional it's about $30 odd. For concessional it's about $6. Then that's the PBS at work. And the reason the US pharmaceutical industry doesn't like it is because the PBS is an enormous buyer of drugs. So basically they buy all the prescription medications for Australia, and they use that enormous buying power to beat down the price and get the best possible price they can for Australia.
Sounds great.
Yeah, it does. And that's great for Australia, but the big pharma in the US don't like that at all, because we get a far better price than they get selling those same drugs to people in the US. So, for example, take a sort of common blood pressure medication. In Australia, the average price is around $30 a month. In the US, that same drug is over $600 a month.
Jesus Christ, that's insane.
And so
actually just completely out of most people's budget.
Exactly right. And high blood pressure is pretty common, right? We absolutely do not want US drug prices in Australia. Now, you might think, well, is it fair to force US pharmaceutical companies to sell to the PBS? But the point is, no one's being forced, right? They're actually entering into free negotiations. US pharma companies could choose not to sell to Australia if they didn't want to. The reason they sell is because they can still make some profit on this, right?
So the profit that they must be making selling in the US
is massive. That's right. Because the US, they can't negotiate a single deal. The government refuses to do that. So they are forced to pay huge prices. And guess what? Those big pharma companies would rather that everybody paid those huge prices, including people in Australia. But I mean, that would be devastating for Australia. It would either mean that, people would be unable to afford treatment, and which could well shorten their life, or it would mean the government would have to subsidise it, which means they would pay an absolute fortune and it would blow the budget big time, paying for basic medication.
So how might our federal government try to avoid this happening? I mean, I imagine it would be incredibly bad for the Albanese government if this actually happened.
Yeah, and I think that both sides of politics, including the current Labor government, know that they can't mess with the PBS. And so they've made all the sounds that say, we've heard Albanese, we've heard Chalmers, we've heard lots of ministers say, we are not going to negotiate with the PBS. The PBS is not up for negotiation. And just to be clear, Australia is not the only country that has this single buyer. A lot of the countries that have universal healthcare, basically, have this similar thing. So it's not just Australia. But, hopefully the government will stand firm, because, look, it would be bad to lose exports of pharmaceutical products to the US. There's no doubt about that. That would cost some jobs. But the cost of that is nothing compared to the damage and pain that would be done by forcing Australians to spend $600 a month to buy blood pressure medication.
Yeah, I think if there's one thing that most Australians know about the US, it's that we do not want their healthcare system or the prices they pay for it.
We do not want a US-style healthcare system.
Absolutely not. Moving on to something else, Matt, the childcare industry has been in the news lately for some awful reasons that we don't need to get into. But in general, the childcare industry in Australia is in crisis and has been for a very long time. Recently, the Australian Children's Education and Care Quality Authority found that at least 1 in 20 childcare centres failed to meet health and safety standards. A United Workers Union survey found that 3/4 of respondents said the centre where they worked was operating below minimum staffing levels at least weekly, and 42% said it was happening at least on a daily basis. And 72% agreed that more children were getting hurt in daycare because of understaffing. But on the flip side of that, there are also many cases of staff having inadequate training, and efforts to fill the gap in workers through fast-tracked qualifications have faced criticism for not providing adequate training or even just being entirely fake. And on top of all of that, childcare is incredibly expensive. As I'm told, I don't have children myself, but apparently some parents are paying up to $220 a day to leave their child in the care of an industry that they are probably understandably feeling more and more that they can't actually trust to keep their child safe. So, Matt, obviously it's pretty much in every single possible aspect a shit show.
Yeah.
But childcare in Australia is predominantly a for-profit industry. Is this the reason behind a lot of this failure, or are there other factors at play here?
Look, there are a lot of factors at play,
Yeah.
but one that hasn't got a lot of attention is that private for-profit providers and the issue that it creates. So the problem here is is that when we do education in primary schools and secondary schools, the government will give a school no money at all unless it is not-for-profit or a state-based school. That is, there are no for-profit private schools in Australia. The private schools that you see are actually not-for-profits. They're run by school boards who, are charged. Their main focus needs to be the education of their students, the care and education of their students. But in childcare, when the kids are even younger and more vulnerable, we have this for-profit providers. And the problem with that is that for-profit providers aren't just focused on the care and the education of students or the people in their
safety.
care, the kids. Yeah. They also have an eye on the profit motive. And that's not to say that there aren't some great for-profit providers. I'm not saying that. What I'm saying is there's an incentive, and look, economists love incentives, but there is a bad incentive there. And also the government pays a big subsidy for every child, right, to go to childcare. So there's this enormous honeypot, if you like, where, it can attract either bad actors because of the money involved, or just people who, are running a business and they don't actually, their only interest is on the bottom line. Because some of the childcare providers are enormous. They're multi-billion-dollar organisations. One of the main childcare providers pays its CEO over $3 million a year. This is a big business.
Jeez, yeah.
And so when they're focused on, they own lots and lots of childcare centres and they're focused on the bottom line, what we're seeing is that, staffing isn't as good. They're looking to pay their staff as little as possible. They're looking at minimising their costs, reducing the amount of staff they need, and they're looking for ways around the rules and regulations to do that. And that's why we're seeing these problems, or one of the reasons, I should say, why we're seeing these problems pop up. If we went away from this private model and we went to the same model we have for schools, right, where it was either not-for-profit or government provided, then you would probably see some of these issues disappear. And when you think about it, there's no reason why, basically almost every suburb everybody lives fairly close to a primary school.
Yeah.
Why can't we also have at that primary school, or in almost every suburb, a childcare centre run by the state government and funded by the federal government? In that particular case then, you could choose, well, do I want to send it to a not-for-profit provider or do I want to send it to my local childcare centre? And in fact, on many cases, you could co-locate them. There's plenty of primary schools where you could put a childcare centre with the primary school, which would be great for parents who have primary school age kids and younger. They could just drop them off in the one spot. And you might think, well, that's crazy. That would be a massive expansion. But imagine we didn't have primary schools and somebody came along and said, well, you know what the government should do? They should set up a heap of schools to educate all the children. People would go, well, that's crazy. But we do it now.
Yeah.
It's not beyond the realm of possibility. And if we think that childcare is important, and all the evidence says it is, and if we think that this is important and we don't want to see this harm, then there is no reason why we can't go down that route.
And so what other factors are sort of at play here apart from the for-profit aspect of it?
Look, there's a bunch of regulations. So childcare is regulated at the federal level, but there's kind of overlap in the states. And so I think that the kind of latest horrible stuff to come out, revelations to come out of the industry, is pushing, fortunately, governments to finally kind of crack down. And we see the federal government, I think, will come out with hopefully some legislation that tightens all of these rules up. But again, you can tighten legislation, and if, you're a government provider or a not-for-profit provider and you think those rules are there to protect children and I'm here to provide the best service I can for children, they'll abide by them. But if in abiding by those regulations you make less profit, there is always an incentive for-profit. And not to say that they will all do this, but there will always be incentives, not necessarily to break the rules, but to bend them, to find loopholes in them. To cut corners, right? And so it's that incentive. And again, not all for-profit providers will do this, but some will. And so we will see these problems re-emerge.
And so has the childcare industry in Australia always been this heavily privatised, or is this a more recent problem?
No, about 20 odd years ago, it was about 50-50.
Mm-hmm.
So 50% for-profit, 50% not-for-profit and government. Then about 10 years ago, it was about 60%. So most of the growth over those 10 years had been in the for-profit, 60% for-profit. And now it's about 75% for-profit. So the growth in the industry has come almost exclusively on the for-profit side. And that's because the government has rightly been subsidising childcare because it's so valuable, not only for parents so that they can go to work, so there's a huge participation and economic value in that, but also just for children. The enormous gains that will last the child through their entire life for getting access to this early childhood education and care are so large that we're going, well, yes, we need more of this. The problem is the government is basically paying for-profit providers, and that's the flaw in the scheme. And I think that more people need to focus on this part of the problem, because at the moment, it isn't getting the attention it deserves. And this is all about incentives. And the government, because it's the major, it pays the money for childcare, it can change this system.
So just going back to what you said about the government itself providing more, government childcare centres, what would the cost for that look like?
Yeah, look, it would definitely come at a cost, but not as large as you might first think. The first reason is that the government funds around 90% of the cost of childcare already. But instead of funding it or providing it, directly, it's paying a private provider. Well, if they stopped sending the money to private providers, for-profit providers, and instead they could funnel that money into providing public or, providing not-for-profit childcare. So it's not as much as you might first think. It would take time, so there would be a transition period. You couldn't just tomorrow turn it all off, right?
No.
That wouldn't work. It would be a transition period where you moved from for-profit providers to just government and not-for-profit. But it's not going to cost that much. And look, Australia is a low-tax country, right? We know that. There are plenty of ways that the government can raise more revenue, whether it's taxing our resources better, taxing wealth better. We've talked about the capital gains tax discount so many times, which would also make housing more affordable. There are all kinds of areas that the government could raise revenue from. But the important thing is these are the most vulnerable people, right? Like they're young children. And at the moment, some of them are being damaged for the rest of their lives because of a system that is failing them. And so, there's a huge moral case beyond the dollars to get this right.
Well said. Thank you so much for this great conversation, Matt. I really appreciate it.
Thanks for chatting with me again.
This episode of Dollars and Cents was recorded on Wednesday, the 9th of July, and things may have changed since recording. If you want to read more about interest rates, childcare, and more, you can read all of our research at australiainstitute.org.au. Music, as always, is by Blue Dot Sessions, and we'll see you all next week.
Bye.